Welcome to Mindset Matters, the official podcast of Oregon REALTORs. In this podcast, we dive deep into the secrets of top-performing agents, market trends, strategies, tips, and tricks that will transform and elevate your real estate career to new heights. Follow or subscribe today, and stay tuned for a podcast that's not just about real estate. It's about mastering the mindset for success.
Hello, podcast listeners. This is Jenny Pakula, CEO from the Oregon REALTORs. Welcome to our podcast today. I'm calling today's episode Insurance Talk, the Home Edition. Our guest today is Interim Insurance Commissioner and Administrator of the Oregon Division of Financial Regulation, TK Key. A lawyer by training, TK has served in a variety of high-profile legal, policy, and compliance roles at the division since 2012. He has led key efforts in the state's policy response to wildfire emergencies, improving the availability and affordability of insurance and combating financial fraud. TK is a graduate of Lewis and Clark Law School and enjoys spending his free time hiking with his son and daughter on the trails of Oregon. Today, we'll learn a little bit about how we got to an insurance crisis in Oregon and whether we really do have an insurance crisis, what's driving these changes in homeowners insurance, and what we can do to protect ourselves. So welcome, TK. Thank you for taking time to be with our listeners today. Tell me a little bit about you and what the Division of Financial Regulation does.
Great. No, thanks so much, Jenny. Really happy to be here with Oregon Realtors today and talking through insurance and all things DFR does. So we are the state's insurance regulator. And so about 2/3 of our staff is dedicated to ensuring that insurance companies have the money in the bank to make good on their promises, on their claims. The second piece is, and a third of what our staff does is outreach and advocacy. So when someone comes to us with an insurance complaint or a question, we field that question. We talk to the insurance company on behalf of the consumer. We work through the specific issue, or in many cases, it's just providing information. So how do I get a good insurance policy around homeowners that covers everything I need? Or what are the options for health insurance? Or simple questions like that, where we've built up a number of publications and guides that are really helpful.
Oh, as far as providing the consumer guidance
Yes.
on what they should have in a policy, do you do that? Or is it because every carrier probably has a little different criteria and qualifications and costs, and we get to
Yeah, no, absolutely. We make recommendations or say, these are the things you should look at. Really, it's making sure you have enough coverage in your policy. Where we see a lot of consumers have gaps is in ensuring that their coverage is adequate. So, and property values, housing values, cost to rebuild have all gone up in the last 5 to 10 years significantly. And so you look at how much it's going to cost somebody to rebuild what was a $500,000 house 5 or 10 years ago. It's gone up significantly. And really the question for those that are interested among consumers who come to us is what do I need to do to boost or increase that amount of coverage, and what should I be looking at?
So frequently do you see, because I know as a consumer of insurance, you always are looking for the best deal, but the best deal doesn't necessarily equate to appropriate coverages. So sometimes you get what you pay for theory. And when there's a catastrophe or you need to dip into your insurance, you're hopeful you have the right coverages. So
Right.
what sort of regulation? I know you're the regulatory body for insurance, licensed insurance brokers, agents in the state.
Yeah.
And I'm guessing many complaints, please correct me if I'm wrong, many complaints involve, well, I didn't know that. They didn't tell me that. And sometimes you could find out. We're the other side of it with real estate licensees, but really a consumer of insurance should understand the basics of what they need and really have a broker, an agent they trust who is advising them. And an agent should be able to walk away from a customer rather than to just get the business, say, hey, here's the coverages I believe you need based on your home or your auto or whatever the case may be. And if they say, nope, I want cheaper, I'm not the person for you. And that's hard to do. It's a competitive market.
Yeah, and very few consumer complaints, relatively speaking. We get about 2,000 per year across all lines of insurance.
At average, is that a lot?
That's pretty average. Most of our phone calls are really seeking information. So it is like, how do I buy a certain type of insurance? Or, hey, I've got someone told me this, my agent, my insurance company, can you verify, is that correct? It's not really in the form of a complaint. And we help consumers navigate those situations as well. But to your point, there are pressures that we hear of through these inquiries or through consumer complaints to, to try to, I suppose, bring coverage levels down so the premium is more affordable. It is a game of trying to find what premium a consumer can pay versus what coverages they have, and certainly with costs increasing, we've seen a lot more of that more recently. But in terms of actual complaints, not as many as you may think, and I think a lot of those are resolved by there's robust disclosures that insurance agents have to make to consumers, sign offs that occur. You understand the level of coverage that you're purchasing and what it includes, and so all of that's very helpful. I think it's the struggle is really the informational struggle, getting that to consumers, the need to ensure that your coverages is staying up to date, the need to work with your agent like once a year to check in to make sure your coverage is adequate. Our outreach team hits all 36 counties in a given year and spreads that message. But amongst how busy people just generally are, that's something that's really hard to get.
So, is the primary role of the insurance commissioner and your team to regulate the licensees, create information, provide education? What's your
The core mission, we're really solvency regulators to make sure insurance companies are adequately capitalized to operate in the state, do business in the state, as well as insurance agents, that they're sufficiently capable through education, through other qualification to be sure that they can work with consumers one-on-one in the state, provide them with the coverage they need. And then, the other function is a consumer protection function. It's the information.
so it is similar to the Oregon Real Estate Agency. You just do it for the insurance side of the bid.
That's the idea.
Got it. So, how many currently? Let's just stick with homeowners insurance. See if we can. We could next podcast. We'll get to other forms of insurance. How many carriers are admitted, and perhaps you could break that down on what that means in the state of Oregon,
Absolutely.
right? Homeowners.
So we're at over 100 carriers at the moment that write in the admitted market. What that means is that's your admitted market is the in big names that you would expect that you see advertised for on television, that provide coverage if you go to any independent agent, or sometimes there's captive agents to these companies.
So a captive agency would be like a State Farm or a Farmer or
Right. Yes. Exactly. Is they just write for that agent, right?
product.
To that company. Yes, exactly. So, so that's the admitted market, and that's where most people go to find homeowners insurance or liability insurance, or just general life insurance. Auto insurance is
So just to clarify, admitted market includes captive and independents. So a Travelers isn't a captive company, but it's a big company. Just use an example. Then the Safecos are the other big Liberty Mutual, whoever else writes here. But I'm just trying to give an example. So if you're not familiar with the insurance industry, it's hard to understand.
yeah, it's hard to weigh it on my so there's captive insurers captive agents that just write for one insurance company, and then an independent agent can write for several. And so the admitted market is the big names that you would expect. So that's one market, and that's where we have over 100 carriers. That's where most people would expect to go and find coverage. We have two additional markets that are important to talk about, especially in the homeowners conversation and in the wildfire conversation. So the surplus lines, which falls outside of our jurisdiction as the state regulator, they write specialty risks. And
Can you give an example?
yeah, so a good example may be, you know, let's say you've got a rock climbing gym, for example. Pretty unique risk, might have some special liabilities to it. So an admitted market carrier may not take that risk or may not write policies in it. So it's a specialty risk. And so you go to a surplus lines carrier and they would be able to place coverage specific to the liability limits you would want for that coverage. Another example would be people who are struggling to find admitted market coverage for homeowners because of wildfire risk or other types of risks. A surplus lines policy may satisfy lending institution or adequate coverage. Oftentimes
It's going to cost the consumer more,
that's where I was going next. Yeah, the coverage can be expensive, and so
but it's coverage.
but it's coverage, and it's validated coverage that will work with a lender. Yeah, lenders have specific criteria to insurance policies what they're looking for, and so you could find that policy in the surplus lines by working with the surplus lines.
So how many is surplus? So when you say it's outside of your purview, that means you don't regulate surplus carriers?
That's correct. Yeah, we don't regulate that. So it's not overseen by us. You have a dispute there. It's usually settled by private litigation or trial. Yeah. So, and so I think in that neck of the woods, you really are looking at it's contained in the policies, the dispute mechanism. Come to us. We have short time. Yeah, and then have to kick it off to. There is an association of surplus lines carriers, surplus lines association that can be helpful in working with consumers on these topics. But really, it just kind of comes down to what's in the insurance policy.
So on the surplus lines, you don't regulate the carriers, but the agents who write surplus line coverage fall within your jurisdiction. So a consumer can have a complaint about some surplus coverage, and the licensed agent is responsible for the same disclosures and
Yeah,
et cetera. Got
it
it.
can be, and I think as well, there's some surplus lines agents that may even fall outside of our purview. But generally speaking, if you bring us a consumer complaint or an issue, we will work with you through that consumer complaint. We'll provide the resources that we have to help you take the next step.
Got it. And did you say there's a third?
Yeah, the third is the Fair Plan, which is our market of last resort. It currently has about 2,000 policies in the state, which to us is another sign of that people are finding a bit of money.
So can we talk about the FAIR plan? Because just to make sure we all understand. So you have admitted carriers, surplus carriers, and the FAIR plan. So there are three different opportunities to get homeowners. Under the FAIR plan, is that regulated by DFR? Are you the administrator or you a FAIR plan?
Yeah, so it acts like it's under the auspices or the general plan framework is through the insurance code. We regulate it like just another small insurance company. And so there are limits that are put in place as to what coverage it can offer. And I suppose it's just take a start.
Your advocacy?
They are not. There's a board that oversees the fair.
Got it.
And so there's a board and an executive director to the fair plan. The board in consult with the executive director and the insurance commissioner set the limits, but ultimately it's the board's decision as to what to go forward.
Okay, so do they I'm just trying to understand. This is a FAIR plan because I know given our market and crisis, that's the market of last resort, but a lot of people are having to turn to it where they might not have had to a few years ago. But sure, given it. So for the FAIR plan, premiums, coverages, everything, and the board decides that?
So it really is at this point, yes, the board creates the business plan for the fair plan. But at this point, it's property coverage only. So there's no general liability as part of these policies. It's a very bare bones policy.
So your house burns down, you have an electrical fire, something, the structure itself. Got it.
Yeah, exactly right. And the limits are fair, $600,000 for homeowners or just general property for individuals. And then
That's the max coverage?
that's the max, but they can enter into reinsurance agreements they have access to additional markets. So they can fill in any blanks up to whatever they can get from other reinsurers to back.
You say they, I mean, the consumer or the administrators of the FAIR plan.
The fair plan, correct. Yeah, the executive director. And it is a case by case basis. And, we've had success in finding additional coverages for people beyond the $600,000.
So what happens, and I know there might not be a one size fits all answer. I have a home that's worth $1 million or 900,000. And I happen to be close to a wildfire, or maybe homes around me where maybe mine didn't burn down, or maybe it did. And I have to go to the FAIR plan because no admitted carriers will write in that area or my property or whatever, and I can't get a surplus line. What do I do in that case? If the FAIR plan says, well, we'll cover up to 600, but your house is valued at 9. So you're on your own for that extra, or we try to get it reinsured.
So what happens in the FAIR plan, the executive director of the FAIR plan, Steve Steinbeck, looks at these with his team, and he will try to find a policy for that $300,000 gap through the reinsurance market. So they have access to boost that policy. That's not always possible, but it is, hitting, the gap between like 600 and a million is a much easier task than some of the items that come his direction where it's several $1,000,000. And that's a real tough spot where that may have to go to the surplus lines just because of the amount of coverage that you're looking to look at.
So in those situations where maybe it's too much for the FAIR plan to fill the gap, is there always, I hate to use always because it's probably nothing that's always, is there typically a surplus line carrier that will cover a home? That's can be $1.5 million, 2 million, maybe close to wildfire in a bad zone.
There can be, and also, sometimes we've had people who have kind of put together a Frankenstein sort of policy at the FAIR plan and a surplus line or other means where they can, maybe it's two surplus lines policies. There's different ways to structure it potentially, but it really comes back to what is the lender looking for and what will satisfy them, and then is that available in the marketplace? And so,
So in these type of scenarios,
yes,
a consumer really needs to rely on a good insurance agent, broker to help guide them. It's easy when you're home, when we can get you coverage and an admitted carrier and it's under a certain amount, you're not even close to a wildfire. Right. But when you aren't in that easy to fill category, you need someone who really understands the market and options.
that's correct. Yeah, and I would say what we have been, advising on these situations with consumers at the call our consumer advocacy line, what you end up learning from many of them, not all of them certainly, but a good number of them is they've stopped at one agent and so it really does take exploring several different agents and seeing what other options might be.
Is the majority of homeowners insurance, I know this deviates a little from my question of how did we get here, is the majority of homeowners or any insurance regulated by the state? The feds, how much does the federal government play a role in reaction of insurance?
So federal insurance, generally speaking, is state-based and regulated at the state level. And so there's really generally not a federal overlay. There's exceptions, of course, health insurance with the Affordable Care Act. It's heavily federally regulated. But even then, there's tweaks at the state level that can be made. So it generally is a state-regulated industry. And how we got here, I think I'd say a few things. One, it's been climate change throughout the western states. Oregon's not alone in that, but people who bought a house what they thought was a relatively safe purchase 20, 30 years ago are now finding themselves in a dramatically changed environment. And so that's been one aspect in terms of the availability and affordability piece. I would say you also have to look at reinsurance at the global scale. So this is going a little bit deeper, I think, than maybe where you had intended. But there are companies called reinsurers that provide insurance for the admitted market. They can provide, and so.
So can you break that down?
Yes.
So admitted market, let's just go with a Safeco. I'm sure they're admitted. Do they must have a reinsurer?
Almost all of our carriers have a reinsurance carrier.
Or what does that mean? Or let's just say I had a Safeco policy. Just using Safeco as an example. It could be any of your admitted carriers. Yeah, I have a Safeco policy for cover my home, $750,000.
It's completely invisible to you. But what happens is the insurance companies, any company, let's just take company A, piles up their risks, and then they say, hey, we've got a lot of risk in all of this book. And so we would like to purchase insurance for that book if something catastrophic would happen, like a massive wildfire like we experienced in 2020, a backstop.
So the reinsurer just looks at the book of business that the carrier has, and I say, too much, too risky, or it's fine. We'll cover you, or we'll give you this much reinsurance
Right.
for X. And the company, your company, I like how you did that, will just pass it through the consumer, the cost.
Yeah, of the reinsurance. That's right. And so, uh, these are global reinsurance markets when you're talking about looking at individual carrier books. And so, these reinsurance companies are looking at, okay, well, what I want to spread my risk around the globe. And I want maybe, to cover 5 companies that have Oregon exposure, but I don't want to do 10 because I'm overexposed in Oregon or overexposed in the US Western states or something of that sort. So they look at, like, could I do, reinsurance to companies that are operating in Asia or Europe or other places? It really is a global market. And so what we have seen has been that reinsurance companies have both increasing costs of their coverage and shrinking back the amount of coverage that they're willing to provide to the admitted market carriers. And that's a real squeeze because that means that our admitted market carriers are, don't have the backing to write additional business. And Oregon's not alone in this. This is a Western state phenomenon. It certainly is impacted even the South, where you have hurricanes and tornadoes and those sorts of events. So it's a global situation.
Have you found, and again, I don't think we can get to solutions today, but I think that's a big part of our conversation because we do have other states to look at because they've had these same problems. Have you seen since 2020
Yeah.
a number of homeowners insurance carriers saying we're not writing there anymore? We're pulling up. We're not going to write in Oregon, or are you finding that they're staying, but it's going to cost a lot more to the consumers?
It's a combination. I've not seen companies outright say we're not going to write policies or write them in certain areas. What we're seeing more of is they're being selective about what they're looking at and really having to be conscious that also the concentration risk element to this. So, um, and a good example is Merced Insurance Company in California was overexposed in one of their big wildfires down there a few years ago. And because of that overexposure, they became insolvent. And so companies are having to look at this through multiple lenses. It's not just, can I write this given property? It's, do I have 4, 5, 6 properties on this block? And can I withstand that? Or is that something that's, financially viable? And then also looking at what are the characteristics of the given property in terms of whether this is something they'd be willing to write.
What happens when, so is it completely within the discretion of the carrier to whether they write and what they write in Oregon?
Yeah, what area do you have anything about? We have standard forms that carriers have to comply with and issue to consumers. But in terms of underwriting standards, as long as they're not unfairly discriminatory, then they are allowed to put them forward. And so you're picking and choosing between risks. You're setting underwriting criteria based on like climate change and wildfire exposures would not be like unfairly discriminatory. So they are able in that context to absolutely like set criteria and set them fairly high if that's what they'd like to do.
Are there any rules when a carrier says, I'm out, I'm not going to write in Oregon anymore at all? Do they give you a certain notice?
They're going to not write in a certain line of business. They do have to give us a notice that I think it's 30 days notice that they're not going to write in that particular line anymore. But that's a pretty drastic step. And we don't see that generally at property casualty or homeowners. It's been more in some of the smaller lines like medical malpractice. It's easy.
So if they do that, is there rules and requirements on notification to the consumer? You have a policy with us, we're not going to renew, or it's going to be terminated before renewal. What recourse does a consumer have?
Yeah,
Doesn't find another carrier.
that's come up a few times. So we've had one company, and I'll mention these company names because it's publicized. That people know. So, like for example, Oregon Mutual decided to exit the personal lines and focus only on commercial. And so in that situation, they gave non-renewal notices and made a graceful exit out of the market on the personal line side by just non-renewing policies, letting them run, but then not renewing them when they came up again. And that's usually the the preferred and most elegant solution to the problem. They don't have the ability, carriers don't have the ability to just cancel people for no reason just because they're exiting a given line of business. And so they do typically have to let those policies run their full term and then make the decision to not renew them. There's a whole slew of reasons where you could be canceled. Most of those are fraud-based kind of cancellation.
These had 3 water damage claims. We're canceling you. Could they do that?
Yeah.
Or is that just a non-renewal type?
Yeah, it's generally what we see as a non-renewal type, and typically it's that 3 in a short period of time. But
No, it's just
exactly, yeah, yes, yeah, but yeah, and really, I think the challenges that we're seeing is that our carriers do want to write coverage and write in this market, and what the big constraint has been to date has been the amount of reinsurance coverage that they can get in terms of uh, expanding or writing more coverage. Uh, they can ask for, in terms of rate, as much rate as they need to, as long as it's actuarially justified, to increase premium amounts to make sure that they've got enough money to back up the liabilities that they've taken on.
if an admitted carrier can't get reinsurance, does that mean they're just limited on the amount of coverage they can provide?
Yes.
Got it. So they can still write, they just can't go fill that gap.
They're going to have a hard time increasing business. And the end of, as we've seen with a number of carriers where you get, comparing to the 2020 wildfires, pre-2020, now in 2025, you're getting half as much reinsurance coverage for double the price of that coverage. It's a real constraint, especially if you're not one of the major players in this in terms of like a smaller regional player. That's a real challenge.
Oh, yeah. So let's talk about wildfire real quick. Yeah, we could have hours at long discussion on this, but I just want to touch on it real quickly. And in our part 2 insurance talk, the home edition, we can go in more detail. So insurers were told not to follow wildfire maps developed by state agencies, correct? Yes. And then ours is repealed now. So what maps do these insurers, what do they follow? How do they create their own maps to determine whether they'll cover in that area, and if so, how much?
Yeah, that's a great question. So carriers for years have created their own maps from data that either they collect or they more often these days get from third parties. And so these companies are able to do a lot of background data on the region that they're writing to. They're able to use satellite data and put it all together in a way where they can zero in on a particular property, an address, a region, and really create labels around it. And what's interesting, and I think what a lot of people maybe don't quite get, because we haven't got this level of granular in the conversation yet, is the third-party vendors oftentimes just provide the data, and then it's up to the insurance company how to react to that data. And so you may have a vendor gives you a map of the entire county, for example, and what a given company chooses to do with that can be exactly the same data. Play to their underwriting decisions can be completely different, and meaning that they will look at it in the lens of how many properties do we have in this county.
And they have their own criteria based on the data they ever see. So if a consumer is non-renewed or my coverage is triple what it has been based on a carrier's analysis of the data they receive, what challenging, do they have the ability to challenge that? Does the insurer have to provide the map data they used to determine the coverage for a particular consumer?
So there's not a requirement that they provide like the granular level data, and oftentimes it's considered proprietary information to them. But these have the consumers call us because we have had a lot of success at diving into and getting different outcomes for people who disagree with it, and it's actually really clear. You can imagine if you're using satellite data, that might not prove out to be the truth at the present. And so we've had people who've created significant defensible space, for example, but because the last satellite imagery was 2-3 years ago, that's not reflected in what the insurance company is telling. So
would highly recommend people call DFR and see what we can do, see if we can get.
Well, so what do you typically do if a consumer calls and said, my premium just went up 3 times because my carrier said we're in a wildfire zone or we're not, or whatever the reason is, so their premium went up. What will you do? What's the
So there's two things that we do. First thing, if it's driven by my rate went up, the first thing we do is we go back to the rate filing and validate that that rate increase is reflected in what the company's filed with us. And so that's one step, and so just providing that confirmation. The second step is in like writing to the company and saying in corresponding with the company, this is what the consumer is saying. Can you give us more information and engage them in the process of instituting a re-review? Oftentimes, like if there's been a significant property change like that or re-review, the company will be willing to do that in some form or fashion. So those are a couple of the steps. You set some of the current legislation. Senate Bill 82 requires the companies now to provide more information to consumers about not only the reason for a cancellation or a non-renewal, but what they can do to become more insurable.
There is a process for consumers when sometimes it might not result in a positive outcome for the consumer, but how much deference, I know it probably is very fact specific, but how much deference do you give to the carrier?
Oh, I think we just want to do the fact checking first and understand the reasoning. And oftentimes, I mean, these are large companies. And so sometimes picking up a situation and asking more questions about it can get us to a better result for the consumers in this whole sea of insureds that they have. I'd also say, we can dive into this next time too. I think one of the next frontiers to this is diving into the data modeling and having people better understand and insurance regulators better understand what's contained in the data modeling, how frequently is it updated, all of those sorts of variables for the very reason that you're raising, which is can a consumer unpack the reason they're being rated a certain way or utterly.
Because it might not be based on wildfire, but the satellite images, so your roof looks bad. Right. There's a variety of things, as I'm assuming, aren't always accurately captured by satellite, but provides a lot of heartburn to the consumer when they get their annual premium notice. So, there's so much to unpack. Next time, I'd like to talk about potential solutions consumers and our members can engage in, and the legislation from Oregon today that was passed and wasn't passed, the wildfire type of legislation, and how it impacts homeowners in the market. Sounds like you're probably unpacking a lot.
Yeah, the next few months for us are going to be extremely busy with rulemaking and bulletins to supplement what passed out of this last session. And so one of the things I will mention, kind of preview the next podcast is there was a bill put forward to look at a reinsurance program and other mechanisms to help contain cost or even lower costs in the property market.
And did it pass?
It did on the bill 829.
All right, Senate Bill 829, listeners. We'll cover that next time, along with the wildfire map repeal and various other pieces of legislation that might make a difference out there for you all. So, TK, thank you so much for being with us today. This was a great overview of insureds in general, and I think that's a good place to start because it's such a misunderstood topic and area that's super important to our members and their consumers, as you know.
Yes.
And of course, our members are consumers too.
Yeah, absolutely.
Thank you, TK. We'll see you next time. Thank you, listeners, for joining us for another Mindset Matters podcast, part 1, the home edition. We will bring you part 2 within the next few weeks. Thank you.